Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is September 26th, and this is a technical analysis preview for the week of September 29, 2014. And I'm going to focus on the euro versus US dollar, and I'm titling this, "It Ain't Over Until It's Over." Of course it ain't over till it's over. Sounds a bit redundant, doesn't it? This quote was attributed to an American baseball player named Yogi Berra. Anyone with the name of Yogi Berra can say whatever they want, and Yogi used to say whatever he wanted. He was a favorite amongst reporters, and reporters used to gather around his locker after every game and just talk to him. And the Yogi had the gift of gab, and so he would say anything that came to his mind. And oftentimes what he said didn't make much sense or seemed a bit redundant. And it became part of American folklore. And some of the quotes that he said was this: baseball is 90% mental and the other half physical. He also said that you can observe a lot by just watching. He's attributed to "it's like deja vu all over again." And finally, the quote, "It ain't over till it's over." Now, if you apply these quotes to trading, I can almost hear myself telling you or saying these things to you in maybe a different way, but something very similar. For example, I can hear myself saying trading is 90% mental, folks. You need to control what's in your mind. The other half of it is just executing the trades. And that might even blow right over your head without you even noticing that I said that. You can also probably hear me say, you can observe a lot by just watching the charts. Well, that seems a bit redundant as well. How about this? It's like deja vu all over again. I've seen this pattern develop. You can probably hear me saying that as well. And finally, it ain't over till it's over. What ain't over till it's over, Greg? Trends. Trends are not over until they're over. Trends are not over until the buyers can take back control from the sellers in a downward trending market, or the sellers can take back control from the buyers in an upward trending market. But until they can do that, until the buyers can take control from the sellers, like Yogi said, it ain't over until it's over. So let's look at the euro versus US dollar. And I'm going to put on my colored chart here first. You remember this chart from last week. And in last week's trading, we ended the week right down here. And I started to incorporate these colored charts in the mid part of last week because I started to notice a pattern here, a pattern around this yellow area. This yellow area was the neutral zone, I called. And the market was finding support in the neutral zone. Yeah, we had one little bar here, but just one little bar. The rest of the time, we stayed above the neutral zone here with lots of lows in that area until we fell below that level, and it was over for the upside here. We started to move to the downside, but then a funny thing happened. We moved back above the yellow zone, back above the neutral zone, and that should have been over for the downside here. But it wasn't, because what did the market do here on Thursday and Friday of last week? It held below these two moving averages. The green line represents the 200, the blue line represents the 100. We're on an hourly chart, so those are the 100 and 200 hour moving averages. The market couldn't get above those moving averages, and so we sold off on Friday and we came down to our low right near the trend line right here, and that's where we closed the week. At this time last week, deja vu all over again. I was sitting right here and telling you that we're going to break next week, this week, in this week's trading. Why? Because the market was in a 160 pip trading range, and it was time to move. It was time to make a break. And obviously the bias was to the downside because we held up here, but we needed to see some things happen. We needed to see the price stay below the 100 and 200 hour moving average, and we needed to see the price stay below the yellow zone, our neutral zone, and stay out of that green zone. And so what happened as the week progressed? On Monday, we had Draghi speaking, and the market moved a little bit to the downside here, and actually fell below that trend line here. And that move below that trend line should have sent the market to the downside, but it didn't. Maybe the trend to the downside was over and traders started to buy it up. But that buying still had one caveat that we outlined last week at this time. And that was to get above the 100, get above the 200, and get above the yellow zone, the neutral zone. Well, we made it above the 100, but we couldn't make it above, and we made it a little bit above the yellow zone, or into the yellow zone, but we couldn't get above the yellow zone. We couldn't get above the 200-hour moving average either. And so when the market first came down to the 100, tried another feeble attempt to move higher and failed, and it's moved below the 100, that was it. That was all she wrote, folks. It was over for the upside, and the market started its rotation to the down, moving below the trend line, and we ended the week, like we did last week, at the lows. Now, in the process, what happened? One area that I want to bring your attention to, and I'll put it in yellow here again, or another yellow area, is this area right here between the 47, it's really 46 and 57.4 level. Note here in trading late afternoon yesterday and again today in early Asian trading, and then probably into the early London session, the market was finding resistance against this 57 level. Well, if I go to the weekly chart, it outlines the levels that were important for me last week at this time and important for trading this week. And some of the levels that were important to me included this low right here, which came in at 127.46.2. Sound familiar? And this low right here, which came in at 127.54.4. Does it sound familiar? If not, it's these levels right here, where the market found resistance sellers. So when the market fell below these levels here and corrected up to that level in yesterday's trading again today, the market was saying to me, this trend ain't over until it's over. And until we can get back above this area right here and stay above that level, the trend remains to the downside. We also have the 38.2% retracement at the 127.61 level, which was providing a ceiling there for the market. So I ask you now, where would the trend be over in trading next week? And the simple answer from this chart here includes the yellow area, the 46 level to the 57 level, and also this trend line connecting most recent highs here. That level is going to cut across on the opening in early trading on Sunday night. So in order to prove that the buyers can take control, we're going to need the price on the top side to get above this area right here, this box right here. That starts at 46 and ends up to 62. If we're able to get above that level, that means we're above the trend line, we're above the 46 level, we're above the 57, we're above the 62 level, which is a 38.2% retracement of this move to the downside. Would that be a condition that might say to you, if we can stay above that level, that the trend is over? And the answer to you should be yes. So risk right now on the Y is right here. That's the line in the sand for next week. Stay below it. The bears remain in control. Move above it. The bulls are taking back some of the control. Doesn't necessarily mean it's over. It's totally over. But this trend is now in question. We could see a further move to the upside. So where might there be our targets for the euro versus US dollar in trading this week? And if we take a look at the hourly chart, there's a couple levels here off of bottom side trend lines. We have this trend line connecting these lows right here, and that level comes in at around the 126.57. Now that's on the opening on Sunday or Monday trading day in the Far East. Now, of course, this line is moving to the downside, so as every hour goes by, it gets lower and lower and lower. So watch that level. If we break below it, that increases the momentum to the downside, and we'll be looking for the next target. And the next target under that on the hourly chart comes in at the 126.25. Again, that is going to be on the opening of the new trading week. And as the week goes on, or as the hours go on, that too is going to go lower and lower and lower. And so when you're trading in a downward momentum where there's not really any other support, these lines may become our target levels for the day, for the week. And as long as we stay below them, or if we move below them and stay below them, that'll keep the bearish bias. What you're going to look for as a trader is if we move below the line and the market starts to break back above that line, then that might be a clue that perhaps there's more upside potential or more corrective potential in the pair for that day, or for even for the week. We don't know. But what we want to see is if the market does break below that level, to just target the next level. And if we get below this level, then we're really in nowhere's land. We'll try to figure out other levels off of the hourly chart, the 5-minute chart. Maybe we'll start to look toward moving down toward this 125 level, where we had this low going back to the week of September 2nd, 2012, might be in the cards. Remember, if we have we're currently at the 126.82 level, a move down to 124.97 would be a little less than 200 pips for the week. In trading this week, we went 230 pips, so it's not out of the question that the market may move down toward this level, or the potential to move down toward that level if the bearish bias continues. So remember, ladies and gentlemen, as Yogi said, it ain't over till it's over. The same goes true for trends in the foreign exchange market. Make sure that the market tells you or gives you clues that the trend may be over. It may be holding a support. It may be a break back above the trend line. It might be a move back above this 127.46 to 57 area that we have earmarked as the line in the sand for this week's trading. Whatever the case may be, make sure the market tells you that it's over. My name is Greg Michalowski. If you like this video and want to see more of them, please click on the subscribe button in our YouTube channel. And also for foreign exchange news and commentary, 24 hours a day, 5.5 days a week, make sure you visit us every day at forexlive.com. Good fortune with your trading. Bye-bye now.